This video is brought to you by my programs on building your wealth. Learn how I built my wealth and the psychology that I used to build my net worth from $2.5 million to $42 million. Link down below. Hey everyone, me Kevin here. Let's talk about Rivian. Should you buy Rivian stock? Well, first things first, this video is being made right before the IPO. However, the information within this video will still be relevant after the IPO. So some of the stuff will be dated regarding the IPO because we'll know what'll have happened because we're going to include a little bit of my expectations as to what might happen at IPO. But we're also going to talk fundamentals on this company and whether or not you should get into Rivian. So with that said, let's get right into it. Rivian, so far, has sold very few vehicles, yet its market cap is likely to exceed that of Honda, and this is raising a lot of eyebrows. Why is this company getting so much attention, and why does everybody keep asking about Rivian? Well, they have three particular vehicles. One is known as the R1T. This is a Toyota Tacoma style pickup truck. These are electric vehicles, BEVs, battery electric vehicles, and there's a lot of enthusiasm for Rivian, particularly because this company is backed by both Amazon and Ford. Which you think, wait a minute, Ford's backing them and they have an electric pickup truck coming out as well? Yep. But Rivian also has the R1S, which is an all-electric SUV, and you get the triple threat, which is kind of like investing in like a Fisker and an Arrival together, because you get the triple threat of also getting into the commercial field of development. So you get the pickup truck vertical, you get the SUV vertical, and you get the vertical of these electric delivery vehicles, or EDVs. And obviously slapping the Prime logo on the side, thanks to that Prime partnership, is a really sexy way to get lots of money for your stock. And by going public with 135 million shares that they're offering to the public, the company is expected to raise over $11 billion, which, since they only had cash burn of about $1.6 billion in the first half of 2021, $11 billion is going to go a long way to help this company develop their manufacturing and finally scale. They've got a large plant in Normal, Illinois, and folks, they are ready to produce. They just need some more cashola. And now we're going public at a time when EVs are pretty hot in the conversation again, especially since Tesla just skyrocketed from the 7 and 800s up to a high of $1,250 until, of course, Elon Musk had to come out and dump 10% of his shares for reasons we don't need to go into in this video, leading the stock to go right back to $1,000. But still, the point is, Lucid has essentially doubled in the last few months, and electric vehicles are all the rage right now. So Rivian's definitely chosen a hot, hypey time to go public. But let's talk a little bit, because this company barely delivers vehicles. Honda sells 5 million vehicles per year, and Rivian doesn't. So what makes Rivian special? Well, first, with its vehicles, Rivian is trying to do pretty much everything that Tesla is doing, they're trying to do as well. So first, let's talk about autonomy a little bit. The cars are expected to launch with level 2 driver assist features. This is going to be like your Honda or Toyota, where you have things like steering and braking. Anytime you just have one thing, like cruise control, that'd be level 1 autonomy. If you have cruise control and steering and braking assistance, or just two things from the pack, you're at level 2. If you have level 3, this is where you can really take your hands off the wheel and let the car drive, and you occasionally have to take over, right? The cars are going to be equipped, the R1 vehicles, are going to be equipped with 11 cameras, 12 ultrasonic sensors, 5 radars, and high-precision GPS antenna, which these are important for future potential level 3 autonomy, which they do expect in the future to get to level 3 autonomy, but obviously we're nowhere near that place right now. We would expect the company would be able to pull a Tesla and try to use this sort of self-driving assisted data and help build out their self-driving platform to actually get to level 3. Though, taking a look at Tesla's full self-driving beta, there's a long road ahead, and who knows how we'll end up getting there. Hey, but Rivian might even in the future just license the self-driving autonomy from Tesla and then have the sensors ready to go. Sensors and cameras, LiDAR not being as exciting for Tesla, obviously. But anyway, the cars come equipped with the hardware. Hardware does add a cost to the vehicles, but hey, it makes sense because really what they're trying to pitch is that they're going to be a future-based company that is thinking about not just electric vehicles, but also self-driving and autonomy and chargers. They're planning their own DC charging sites. They're going to call them RAN DC charging sites and Rivian waypoints. They also are going to have a charging management software, both for fleets and individuals. So like you could check charging on your iPhone. They're going to sell charging as a service so they can continue to milk revenue. They do expect that within 2 years, they will have over 3,000 network chargers, 3,500 planned chargers, and 600 different installation sites. Tesla, just for comparison, has 10 times as many chargers at about 29,381 and 5 times as many locations at 3,264. So worth noting, 600 sites might sound like a lot. Tesla's got 5x that. And we're talking about on-brand chargers. Of course, you could charge at off-brand chargers as well. The company does manufacture its own battery pack. Of course, they source their batteries elsewhere. Fleet management controls are a big deal for the company as well, since they're really trying to get into that electric delivery vehicle space. And the neat thing about those electric delivery vehicles is it's a space that a lot of companies are trying to get into, but they're having trouble getting funding because company adoption just isn't there yet. Look at, for example, Canoo, another EV rival that really does these electric delivery vehicles. But Canoo has been floundering, possibly because they don't have that consumer pre-order opportunity or that consumer buying, say a pickup truck or an SUV like Rivian might, to help fund the development of the commercial vehicle side. Imagine, for example, if Tesla started with electric semi-trucks instead of an expensive Model X and S. It'd be a whole lot harder for Tesla to get off the ground. So this is a good strategy by Rivian. I support this and like this. But now, why is the company so exciting? What is making this so exciting? Well, the reality is the company is so excited in the marketplace because of an Amazon and Ford investment and partnership, essentially. Amazon has ordered 100,000 electric delivery vehicles. 10,000 of those trucks are due by the end of the year, though we don't actually expect that many to be delivered by the end of this year. We'll see. The details of the Amazon deal itself, like price per vehicle, were redacted from public documents, but we know the deal exists. We also know that it is cancelable, so Amazon just has the first right of refusal on up to 100,000 vehicles, but they do not actually have to purchase the vehicles, though obviously Amazon is financially incentivized to be optimistic about this deal, given that they've invested a lot. Amazon has plowed about $1.345 billion into Rivian, so almost $500 million into Rivian through stock investments and another $490 million purchasing bonds sold in July. That's about a $1.8 billion investment. Amazon's stake is reported to be 20% in Rivian, and if Rivian tomorrow IPOs and it gets to a $100 billion valuation, Amazon will essentially have taken a $1.5 billion investment and turned it into 20. That is a return of about 13.3%. I'm sorry, 13.3x. So if you ever want to get rich quick, just be Amazon and invest in an electric vehicle company early. By the way, that does not mean you buying at IPO, because you're making that richness happen for Amazon. We'll talk more about my expectations for the stock and what I invest in just a moment. Now, Amazon, this partnership, obviously very, very big. It's worth noting, some people are wondering, should you buy Amazon stock to invest in Rivian? Probably not. Amazon has like a $1.8 trillion market cap, so for every $100 you'd put into Amazon, only about 1.1 would actually go to Rivian in terms of that ownership share, right? So that wouldn't necessarily make sense. Ford, by the way, also has a 12% stake and stands to make about $7 billion from their investment. Ford, by the way, plans to spend $30 billion on electric vehicles through 2025. GM, by the way, was also interested, but Ford ended up snagging the deal rather than GM. And this was back in 2019 when GM was fighting for the company as well. So now let's get to some revenue per vehicle, and let's do some numbers on a spreadsheet here. So revenue per vehicle, we expect lifetime revenue for these vehicles to be $64,600. Now there's an asterisk on this because that does include roughly $14,000 to $15,000 of paid software and charging upgrades, which I don't generally like including in the actual bundle of the cost of the car, but you can play this however you want. We're going to do it both ways. That way you can make your own projections. Now, regarding deliveries, this becomes very important. So revenue becomes important, whether you go with 50,000 or 65,000 per vehicle, or you end up, you take those numbers and then multiply it by projections for, say, 2025 manufacturing. These are going to be your big variables in terms of how you're going to come up with a projection for this company. So how much per vehicle? Take a margin rate, and then, of course, how many vehicles, right? Very, very important, kind of simplistic, but might sound complicated. It'll make more sense when we put it on a spreadsheet. So in order to do this, there are a few different ways we can do estimates. We could take a look at Barron's, which suggests maybe we'll be able to sell 800,000 vehicles by 2025. Some folks are more bullish that we could get to 1 million by 2025. Some folks are less optimistic. They think we're only going to get to 300,000. Some folks think we're only going to be at 50,000 vehicles by 2025. So the numbers are absolutely all freaking over the place. And this is very important to consider because when the numbers are all over the place, it's important as an investor that you know you are speculating on not necessarily the stock, but on your expectations for how many deliveries they're going to have in 4 years from now in 2025. So here's how I made sense of the numbers. And this is sort of just my expectation. The company here in their amended S1, which is like 300 pages long, they say that they expect their total addressable market for vehicles to be 81.1 million. Their serviceable addressable market, so like pickups and SUVs, they think is about 7.9 mil. So some people are just taking a percentage of that and saying, okay, well maybe if 7.9 is the total vehicle market, maybe take 15% of that or 10% of that or whatever, say Rivian can get that much. I don't know about that. So I'm going to put that speculation aside. I'm going to show you how I'm going to go with a totally different number here. So market-wide in just the United States, which even though they say US and Canada and Western Europe, I'm going to be conservative and I'm just going to use US numbers here. We sell about 13 million commercial vehicles, light commercial delivery style vehicles per year. We also sell about 17 million pickups and SUVs. 14% are pickups, 8.8% are SUVs. 17 million, we sell about 17 million cars in the United States per year, personal cars. Of that, 14% are pickups, 8.8% are SUVs. So what we could do is we could hop on over to a spreadsheet here and do a little bit of calculating, number crunching the way I like to do it. So I think if we take a 3% share of all the light commercial vehicles, we get to about 390,000 vehicles. Keep in mind that Ford has a 14% market share of the pickup segment, okay? Maybe they'll get a higher segment, but this is just of this is of all pickups, which is, again, pickups are 14% of 17 million vehicles sold. If Rivian gets 3%, that would be 71,000 pickups. We can modify this, and we will. We'll play with these numbers. If Ford's at 14%, maybe Rivian's going to end up being that 14% market share in the future, which would obviously drastically change these numbers. But we're going to start the numbers assuming 3% market share of pickups, of SUVs, and of light commercial vehicles. That brings us to about 506,000 vehicles for 2025. Get rid of that. That's old. Okay, good. So revenue per vehicle, we'll go with the high number for now. We'll go with 67,000. 60. Yeah, this is right. 60. Hold on. Oh, I'm sorry. Lifetime revenue expected to be 64,600. There we go. We'll go with this first. So 64,600 lifetime revenue. And so that's why for services, I'm putting in 0 here because we've got the LTR already, lifetime revenue, already built into the top here. So now we're going to put robo-taxis, all that other stuff, we'll just leave that at 0. That would be about 33.5 billion in revenue. If we take a 25% expense ratio and a 22% tax rate, slightly higher than the 21% where we are, we'll probably be at an earnings per share of about $2.91 in the future. If we multiply that, let's get rid of, this is price today. Let's say it's $80 today. Okay, that doesn't matter so much. So if we have a $2.91 EPS in the future, in 2025, and we multiply that, assuming the company's really taking off, it's growing, and we multiply it by 100 times. This assumes a lot of growth still coming to the company. 100 times You know, if they're manufacturing 500,000 vehicles, you put 100 PE on it, you're thinking they're still going to grow substantially. They're going to do millions of vehicles per year, right? So you still have a lot of optimism for the company. By the end of 2025, so in 4 years, the company could be selling for $290 a share, which obviously if you could buy it now at $80 is a steal. So if you buy it today at, let's say, $80, that would be a 38% compounded annual rate of return over the next 4 years. It's 38%, 38%, 38%, 38%. That's great. That's only, folks, at 3% for each of these categories. It's actually not horrible. Now, if I take off the lifetime revenue crap, and I'm going to go a little bit more conservative and just go with a $50,000 vehicle on average, which, by the way, Tesla's average is about $49,800, $900, right around there. So I think that's fair. Let's go with this number. Still giving them the 25% expense margin over here. So 75% expense, 25% gross profit margin. Tesla's at about 30% gross profit, so a little bit more, but I'm going to be conservative here. I'm going to stick with this margin. This would get us to about $219. Still very, very, very good, right? And obviously, I mean, these numbers look excellent and phenomenal. But it all comes down to this, folks. Literally all of it comes down to their ability to sell. Are they going to be able to ramp to this? Look, in 2021, if we have, I don't know, 300 deliveries, can we get to 15,000 vehicles in 2022? Can we get to 50,000 vehicles here? Can we get to, say, I don't know, 200,000 vehicles over here in 2024? Hopefully you could get there even sooner, right? Honestly, to get on this path, you'd probably have to take the money and ramp much faster. You'd probably have to be something like this kind of ramp schedule where you're at 45,000, 100,000, 275,000 vehicles, and then eventually you are at 506,000. That's probably the kind of ramp schedule you would need to make this happen. Now, obviously, if they don't ramp like this and the numbers end up being a lot smaller, then the stock's going to suffer. Let's say they only get 1% market share by 2025, which is 4 years away, 168,000 vehicles. 168,000 vehicles using the 50,000 number over here puts their stock price at $58 with 100 times earnings. But 100 times earnings might not be true because if they're stagnating, they might only earn a 50 times earnings, right? This is where things could just go crap. If they don't get consumer adoption, which you're going to be biased because you're researching Rivian, you're researching Rivian stock, you're going to be biased about the stock. You're going to be biased about people's willingness to adopt and buy the car. If another company comes around and beats this company substantially to where nobody's caring about a Rivian, that's not good. So if you're betting on the stock, the most important thing that you have to ask yourself is, do I believe people are going to buy the car? Do I believe that companies are going to buy an electric vehicle with 150 mile range, which probably realistically only has like 100 mile range because we all know how it goes. They estimate a 150. If you get 100, you're lucky. Or maybe that's just Tesla, I don't know. But okay, fine. Let's go back to 3% for a moment, and let's play it up. Let's say they get, they boom time, okay? And we get 7% adoption across the board, which should just be ridiculous. You know what? I'll leave the commercial one at 3%. I'll go 7% for the consumers. Here, we'll go 4%. There we go. 800,000 vehicles. This is like Barron's estimate, okay? 800,000 vehicles by 2025. And it was just, I think they're just guessing too. Okay, 800,000 vehicles. This could be a $356 stock. That's a 45% compounded annual rate of return. So the biggest question as to whether or not you should invest in this company is obviously, are you part of my Stocks and Psychology of Money course so you can learn how to build your wealth and do fundamental analysis on companies and invest in companies yourself? Teach a man or woman to fish, feed them for life, right? Check that out. Use that coupon code link down below to get a 41% off. Use that coupon code StockDoc. But outside of that, for either stock investing, real estate agent sales, or making YouTube videos, the big question is, are you in this fundamentally or to trade it? If you're in this to trade it, there's going to be insane momentum. We're in an EV upcycle. There is a lot of enthusiasm about this. This is going to be at peak media when it IPOs, and it is going to taper after that. Generally, the best time to buy is when peak media passes, the stock falls, it's no longer peak media, then you buy, and then you ride fundamentally with the company, right? So if you're getting into it fundamentally, I probably wouldn't buy at IPO unless you really think people are going to adopt these vehicles. If you're getting into it to trade, remember what Coinbase did. It went green for 5 minutes and then went straight down like halved. It was horrible. It was a horrible IPO. Okay, cancerous IPO. So not to make light of, not to compare cancer to stocks, but anyway. So do you believe that people are going to adopt this vehicle? Personally, if I go with a worst case scenario, I think by 2025, they make 150,000 vehicles by 2025. That'd be like a worst case scenario in my opinion. Let's go with that. Let's see what that looks like. And that would probably be about a 1% adoption across the board. Okay, that's about 168,000 vehicles by 2025. Let's say they get to 168 by 2025. Again, it's a loser. At that point, you're losing money investing in this company. The growth rate just didn't sustain. So really, you probably have to be at about 2% across the board. You got to get to about 300,000 vehicles by 2025, which keep in mind, NIO is doing like 10,000 cars a month. They're doing 120,000 cars-ish a year, and they've been pumping for a while. So, personally, at $80, if you believe they can get to this production level, great. Just know it's very difficult to scale. I probably will not buy this fundamentally until the hype dies down. And if I miss the boat, don't really care. Because I don't have that much cash around. It's not something that I want to invest in at peak hype. And I also have no idea how good their manufacturing is going to be. I have no idea how good their car is going to be. I have no idea. They don't have a charging network yet. Why are you going to buy a Rivian with no charging network when you have to use third-party chargers? Same reason as you're buying really a Lucid right now, although they have the partnership with Electrify America. Rivian's got a long way to go. I think it has hope and promise. It's following a Tesla model, but hey, becoming that number 2 electric vehicle manufacturer, it's going to be hard. I wish Rivian the best. I cannot invest in this. I think if it explodes, there's a good chance it hypes down and there'll be a better opportunity to buy this. If I could buy this at $50, $60 a share, and then as long as they get to 168,000 vehicles by 2025, that's more reasonable to me. So $58 a share below, I like. Until then, I don't care. If I miss out, no problem. So that's my video on Rivian. Thank you very much for watching. If you found this video helpful, please subscribe, share the video, and we'll see you in the next one. Thanks so much. Goodbye.